Hello, and welcome to the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland. Today's panelists are Mark Bowman, our Global Markets Specialist, and Mark Soderberg, our Senior Ag Market Specialist. Starting with the ags, Mark Soderberg. What has triggered the higher trade across the ag space to kick off this holiday shortened week?
Well, I think first and foremost is the South American weather forecasts. For months now, conditions have been nearly ideal as farmers have gotten their crops in a relatively timely manner. Frequent rains in the first half of the growing season has also generated talk for the potential for record yields, primarily for Brazilian soybeans. However, as we head into year end and look forward into forecasts here into the first half of January, a drier trend has developed across central parts of Argentina, and now it's starting to stretch into the east central growing regions of that country and into far southern Brazil. While a full-fledged drought is not expected, we could see enough stress to develop to threaten lower yields here and slightly lower production than what was previously expected. In addition, heavy rains and in some cases isolated flooding is likely to occur across central and northern growing regions of Brazil, as the soybean crop there is setting pods and is in their most yield-sensitive stage of growth, with speculative traders holding a pretty sizable short position in beans and a record short position in soybean meal. The South American forecast, I think, combined with slightly better export demand news of late, has able to generate a little bit of a short covering rally here as we get into the end of 2024.
Well, what other events this week will drive ag futures prices?
We do get out our commitment of traders update from the CFTC this afternoon. This was delayed from last Friday due to the holiday shortened week. The report, however, will only take us up to positions through last Tuesday, the 24th, so it will not reflect some of the strong buying that we saw at the end of last week. A lot of demand numbers out this week as well, starting off with tomorrow's monthly EIA report on biofuel capacity and feedstock update. This will show how much biofuel and renewable diesel was produced in the month of October, while also providing a breakdown on the feedstock usage for the month. On Thursday, we'll get our weekly ethanol production data that comes out Thursday morning. That afternoon, we'll get our monthly updates on census soybean and grain crush from the month of November. We expect soybean crush to be record for the month, while corn process for the production of ethanol could very likely be the largest ever, as the weekly figures during the month were strong. We also get a weekly export sales report that's now delayed until Friday, given the New Year's holiday. So a lot on for a holiday shortened week. There's a lot of demand numbers being thrown at us.
All right, thanks, Mark. Moving over to Mark Bowman. What are some key themes in crude oil markets for 2025?
Okay, well, first of all, we have, of course, the incoming Trump administration and his desire to ease regulation and encourage more drilling would seem to add to the supply, but you don't really expect that to happen right away. Price is currently at mid-range. The question is, what kind of incentive will there be to really boost production? So on the front of it, that sounds maybe bearish, but on the other hand, we have Iran. Iran, with Hamas and Hezbollah severely damaged by Israel now talking about going after the Houthis, and the collapse of the Assad regime in Syria, Iran's role in the world, its ability to influence world events has been diminished. And this may encourage or attempt the Trump administration to accelerate sanctions against Iran to put further pressure on them and their leaders. They could cut off, or which could reduce their capacity to sell oil around the globe by extending any type of restraints or against their production. This could benefit U.S. crude oil exports and generally tighten world supply. Other issues is China, of course. That has their demand situation has been one of the key bearish factors throughout the year that has been pressuring markets. Their sluggish economy, slowing down of their crude oil demand. Now they seem to be lately more willing to boost their monetary and fiscal support of the economy. Last week they announced a 3 trillion yuan of special treasury bonds, but they still have this property crisis. And also their interest in alternative fuels continues to grow through electric vehicles and natural gas powered trucks. And some analysts have called for a peak oil consumption in the next couple of years. On top of that, U.S. crude supply is relatively low at last week's number, 416.8 million barrels. That's the lowest for this point in the season in at least 6 years, and the lowest overall since September. And Cushing stocks, which is where the delivery point for the New York futures, they're 22.7 million barrels. They're lowest in 6 years. So U.S. supply relatively tight. So those one more issue looking forward to next year.
Well, moving over to sugar, what themes do you see in the new year?
Sugar, we got a couple bearish factors. The first is being the expected stronger production out of Thailand this year. They're expected to see a good recovery after last year's problems due to drought. They got good rain this summer. And Brazil, their production was 25 production was thrown into doubt with that severe drought they had in 2024. But they've seen some pretty active rains in the center-south growing regions over the last couple of months, which may have helped to rejuvenate the cane crop following the drought. On the bullish side, we had an improved monsoon in India this year that was supposed to make their cane crop better than last year, possibly even opening the door for some exports. But now we've had some damage due to too much rain, and that's raised concerns about the yield, some even suggesting a production deficit. And Brazilian production for 2024 has already started to drop off sharply.
All right. Well, thank you both, and I wish you both a very happy new year.
Thank you.
Remember the views. You're welcome. Thanks. Remember the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you would like more information about our brokerage services, please visit admis.com. Thank you.
Thanks.